Hey guys, and welcome to the Working Money Channel. Happy Saturday. I hope you guys are having a great weekend so far. The crypto market has been holding up. Despite the fact that we have been in turmoil, the bears have returned, and XRP is trading at about 40.5 cents. It is, in fact, holding this level of support that we saw from back in February of 2021 before we saw that push up. Now, I got XRP here on the daily, and you guys can see that right over here. We did see a bit of a bullish day yesterday, so holding support. Buyers are coming back, and take a look at that volume bar there. Buyers were coming back, and yesterday's candlestick did engulf the candlestick before it. Actually, let me just remove that. If I punch in here, you can probably see a little better here. Volume is up, all right, so that is always good. We can now see more positive buying pressure than there was selling pressure 2 days ago. And although we did not close yesterday's candlestick above the wick of the previous days, it is a good indicator that we could possibly see a reversal in the near future. Now, that is on the short term. Who knows what the long term is going to bring? Of course, Bitcoin is going to be a major player in what happens to the rest of the market. And, despite the bearish sentiment, guys, technically Bitcoin has not broken down. I mean, it has wicked down, but it is maintaining this level of support here. So what is going to happen next? I mean, yeah, we're all feeling bearish considering the Luna fiasco that we've all witnessed, but technically Bitcoin is holding, and that's a good sign. All right, that is a good sign. We could actually correct lower, and that's not out of the cards by any means, but at least as of now, we're still holding critical support. But be careful out there, guys, because I know there are some people now who are seeing opportunities, and they're thinking to themselves, well, maybe I should just throw a little money in and start gambling instead of investing. And I mean, that's okay, so long as you know that that's what you're doing here and that you're not obviously gambling more money than you can afford to lose. Stefan Hubert here saying, crazy, please be careful. Retweeting out this tweet from Watcher Guru. Crypto.com is reversing profitable Luna trades from May the 12th, claiming users were quoted an incorrect price. So apparently there were some investors that were trading Luna on Crypto.com, and Crypto.com is saying, no, you got to give the money back because there was a mistake there, and those trades should not have gone through. The Crypto Cannabis channel down here saying Crypto.com has screwed me because I sold my Luna during their glitch. They have locked down my HBAR and XRP, so I can't move them off the exchange. Another good reason why. Never keep your cryptocurrency on an exchange. If you're not trading it, you should probably put it in a cold storage solution, not your keys, not your crypto. I personally use the Ledger Nano. I have an affiliate link in the description. All that jazz. You can use it if you want. You don't have to use it. But another example here of why you probably should not hold your cryptocurrency on an exchange because, exchanges like this could hold it hostage if you don't pay up. In this case, they're saying, no, you need to give the money back for the Luna trade that you made because it was a mistake. And Andrew Zell just saying, well, F them, it was their mistake if they quoted you the wrong price. Also this, Stefan Hubert also bringing this up, this is absolutely nuts. $30 billion in losses within a day, and now they want to relist it. So just the other day, Binance actually chose to delist Luna and UST from their exchange. But now they are saying Binance will resume spot trading for the following trading pairs, namely Luna to BUSD, which is Binance's own stablecoin, and USDT to BUSD. So, Stefan bringing up a very good point here, but XRP is too dangerous and centralized. This space is completely rigged, absolutely rigged. So, it begs the question, why can these exchanges feel comfortable listing Luna and UST after that entire debacle that we saw with Luna? The rug pull, all right? Luna trading right now at about 3 cents, so it is up a little bit, and it is still trading on open markets. However, this was clearly a scam. And yet Binance is saying, okay, we'll relist it. Cool. Just trade at your own risk, Yet, why can't you list XRP in the United States? All interesting questions. It does make you think about, well, who's telling who what to do? And is there something bigger at play here? I think a lot more people just went, But despite all that, guys, the crypto market has been fraught with its fair share of turbulence. This brought up by Dan McArdle here on Twitter, just kind of outlining his history being in the crypto market since 2011. So he says, in 2011 when Gox was hacked and Bitcoin market dumped to a penny, that was the entire ecosystem. In 2012, when Pirate Teat 40 blew up, that swung the market 50% in a few days. In April 2013, when Bitcoin fell from $266 to $50 in a day, that was also the whole ecosystem, and we were the laughing stock of FinTwit and many mainstream publications for a long time. In 2014, when Gox declared bankruptcy, almost everyone outside of Bitcoin equated it to the protocol itself and wrote the entire thing off completely, leading to a negative 80% bear market. In 2016, Ethereum suffered a DAO attack, an existing situation at the time for a top asset that wrecked a major bull market it had been in. In 2017, the bull market, we had a nasty bear phase that saw Bitcoin go down over 80% for months and Ethereum down over 90%. Again, the entire ecosystem was written off by many. In 2020, the beer flu liquidity crunch. Bitcoin fell 50% in a day, and most other crypto assets fared much worse. Despite all assets getting smoked that week, Bitcoin and crypto were singled out by many as a joke due to the more extreme moves. And yet, despite all that, we are still up 581,000% over a decade. So, to put things into perspective, guys, things will get better. And, if you've been in the space for a long time, obviously, some of these things may phase you less than people who have gotten into the space more recently. He goes on to say, so by comparison, one top 10 coin blowing up representing less than 5% of the total market cap doesn't phase me too much, but maybe I've just seen too many things at this point. OX Markdown here saying, nice tweet, but what about the 99% of coins that are completely gone, not in these figures? Well, Mark, very good question. Again, this is why you should only invest in cryptocurrency projects, in my opinion, that actually have true value. The coins, the companies behind them that solve problems, obviously these are going to be the coins that fare well. This is why, the powers that be over there at the World Economic Forum, at least that's part of it. They released a document last year and they have outlined specific utility coins, some of the usual suspects there, some in the top 10. And so, these are the coins. These are just some of the coins. You don't have to just focus on those coins, but, these are some of the coins, obviously, that are going to solve problems. And, this is how you can avoid these types of situations. To that point, obviously, we are seeing companies like Ripple expand their partnerships. And this is always a good sign, right? That, if other companies have faith in the cryptocurrency XRP and in Ripple, and what they do, then obviously maybe we should be paying attention. So this from the Wrath of Kahneman, Ripple partner Al Fardan Exchange started a domestic workers' salary payment service. So this is just one of a few of these types of projects that some of these Ripple partners have been exploring. So they are a leading money transfer and currency exchange firm with a license and regulated by the Central Bank of the United Arab Emirates. And they announced just the other day the launch of a domestic workers' salary payment service through Wages Protection System across its network, allowing employers a convenient platform to pay the domestic workers' salaries. Al Fardan Exchange has introduced the service in line with the directives of the UAE Ministry of Human Resources. This too will enhance transparency and security for both employers and their staff. So this is certified even by the Central Bank of the United Arab Emirates. And this Ripple partner, Al Fardan Exchange, looking to start this wage protection program in order to, help service those who may be underbanked in the country. It includes a remittance service so domestic workers, largely foreign, can remit funds. And again, through a Ripple partner, leveraging RippleNet through Al Fardan Exchange. Wrath of Kahneman goes on to say, we've seen this earlier with Ripple partner Lulu Exchange as well. The UAE's WPS is a move towards financial inclusion using a card with easy access to Ripple partner remittances capabilities. In the UAE, migrants make up the majority of the resident population and account for 90% of its workforce. So there's a big need for remittances and cross-border payments, and the fact that it can be affordable, cheap, and efficient, this is all good news for the banked and underbanked in this part of the world. They come largely from India, Nepal, Sri Lanka, Bangladesh, and Pakistan, all of which have important Ripple-using banks. So also note that. India, he says, for example, they equal the inward remittances there. So, you generally have countries where you're finding that they're receiving more remittances rather than sending more remittances. I don't think that matters too much necessarily in the grand scheme of things. The important point here, though, they're leveraging RippleNet technology. These are all Ripple partners. Interesting news. Wanted to thank the Wrath of Kahneman for posting that. I also saw this guy's on Twitter from XRP Paynet. I didn't know that this existed. Have you guys heard of XRP Paynet? It will dominate the crypto payments industry with buy now, pay later, and crypto to fiat payment settlement. So, and that's coming soon. They haven't even started yet, but XRP Paynet is a cryptocurrency built on the XRP ledger. Transaction speeds to transfer any amount of XRP Paynet from one wallet to another takes 1 to 5 seconds, and costs are fractions of pennies. So similar to XRP, the team at XRP Paynet does not aim to compete with Ripple or XRP, so that's an interesting point too. We aim to change the payments world forever by focusing on change in online and in-store payments, in the field business to customer payment markets like plumbers and electricians. So interesting looking at the trades there. Of course, they need to receive payments and might not want to carry around a credit card terminal. In the world of peer-to-peer transactions, Ripple and XRP are focused on and are already currently conquering the bank-to-bank and international settlements market. We are going for everyday transactions and micro-payment markets. So another interesting project built on the XRPL, looking to, and as they say, not looking to compete with XRP, but looking to change the face of payments in another capacity. Interesting news there. Wanted to keep going, guys, because the big news here yesterday was the deadline for the filed response, and James K. Filan always bringing us the latest news with regards to the Ripple SEC lawsuit. Ripple defendants file response to SEC attorney-client privilege claims regarding the Hinman speech and notes. So let me go over some of this, and we're going to get into it. We're also going to take a look a little bit more in depth to what this could mean. So this just outlining that Brad Garlinghouse, Chris Larson, and Ripple, they filed their report, their response here. The court has ordered the SEC multiple times to produce documents related to the formulation of a speech that former Director of Corporate Finance William Hinman delivered in his personal capacity in June 2018. First, the SEC resisted claiming the deliberative process privilege protected from their production. The court rejected that argument. Now the SEC has doubled back to a theory it has not raised in several briefing rounds, that they all protected attorney-client privilege communications because Mr. Hinman shared drafts of the speech with other SEC staff, including some lawyers, for the primary purpose of seeking legal advice. This is wrong for 4 reasons. And here are the 4 reasons, guys. First, the record in this case demonstrates that Mr. Hinman delivered his speech in his personal capacity. He sought input from SEC colleagues as to how best to package his remarks. That certain colleagues discuss legal concepts in some of their responses does not imbue them or other communications with any attorney-client privilege. Second, circuit lawmakers make it clear that advice on policy or messaging issues, even from lawyers, is not protected by attorney-client privilege. Second, while Mr. Hinman was entitled to communicate with SEC lawyers and to receive privileged legal advice, when discharging his role as the Director of Corporate Finance, communications about the substance of his personal remarks are not within the scope of any such attorney-client relationship. Third, the communications at issue involve no confidential information concerning the agency that would be protected by the attorney-client privilege. And finally, even if the SEC could establish the elements of the privilege, which it does not, the SEC at most would have identified a privilege claim that it lacks standing to assert because the privilege would belong to Mr. Hinman. And so the brief goes on. I will link this in the description, guys. Wanted to thank James K. Filan for posting that. But Fred Rispoli here, I think he breaks this down quite nicely, responding to this. Thanks to Filan Law, another excellent brief by Mr. Solomon and the associates working for him. An absolute takedown that exposes the completely contradictory positions taken thus far by the SEC. In fact, they are layered contradictions on top of contradictions. So Fred Rispoli diving into this and really highlights the problems here. He goes, first, reading a brief like this infuriates me because it crystallizes the absolute hypocrisy of the SEC. Someone posted just yesterday that SEC's Director of Enforcement was whining about defense lawyers stonewalling the SEC. And this is what the SEC does when it doesn't like the spotlight thrust upon itself? Pathetic. Second, we don't get much from the attached excerpted Hinman transcript, but we do get some more insight. There is zero doubt in my mind that Mr. Hinman has a big problem here. He doesn't remember anything from the dozens of edits he sent to dozens of people about one of the most significant speeches in the history of cryptocurrency by an SEC official. He, acting in his, excuse me, I actually had to go ahem in real life, personal capacity, that moved the market by billions of dollars. It's likely his entire deposition probably is him saying, I don't recall any details about every decision he took in the last 2 years at his high-ranking government job. And then he puts this in capitals. No jury in the world will buy that, and the case against you personally grows stronger by the day. Fred Rispoli continuing here saying, third, I won't get into the legal argument that much because Matty C explains it simply and much better than I could, but TLDR is Ripple will win this unless political machinations are afoot. And they may be. We will see. So it's very obvious to Fred Rispoli here that, it is a no-brainer. Ripple should be winning this unless there is something political behind the scenes, which I think at this point in time, we are all kind of saying, well, how could there not be, considering, all the peculiarities about this case? There is no basis for SEC's position, as Judge Netburn already held it settled that Hinman gave the speech in his personal capacity. SEC lawyers are not his personal lawyers. SEC screwed itself with its short-sighted position to say the speech was Hinman's personal speech and not SEC guidance. It would have been so much better for the SEC not to have done this. Fourth, I love the standing arguments on page 5. If the SEC is going to loan out its lawyers for Hinman's personal use, Hinman needs to assert the privilege. Although it would be incredibly stupid, I honestly would not be shocked if we see a new self-serving declaration of Hinman in the reply, which would trigger a SIR reply by Ripple and at least delay this saga another few weeks. Lastly, we are still on track for my prediction that the earliest we have a decision on this issued from Judge Torres is July, reply due next week, and probably 2 to 3 weeks from Judge Netburn to rule. I don't think the SEC is dumb enough to file another motion for reconsideration to Judge Netburn, but again, it would not shock me at this point. But I think Judge Torres rules pretty quickly once the SEC objects to her, and we're in July at that point. Great job, Ripple. Great job, Mr. Solomon. So just an analysis here, and again, if you guys care to go over this, I will link this in the description of the video. On top of that, there was also this. It feels like the delay seem to be an ongoing theme here. James K. Filan saying, the parties file a joint request for extension of time regarding the attorney's fees connected to the Mets supplemental report. So even Ripple's lawyers are now saying, yeah, okay, we will delay you having to pay the fee. The parties therefore jointly request that the court extend the deadline by which any motion for attorney's fees must be filed to May the 27th. So that is something else that just came up yesterday. Fred Rispoli also saying, the second time disappointed in Ripple's legal team. Again, not significant to the merits of the case, but I bet this is due to the SEC complaining about needing more time, that Ripple's bills are ridiculously high, etc. No legitimate reason Ripple couldn't have filed and let the SEC object. And so why didn't Ripple just send the SEC the invoice? If the SEC didn't pay, couldn't Ripple just sue the SEC? This coming from XRP Bobby Dad here on Twitter. Okay, but it's a bit fishy coming from Dictator Know-It-All, considering how damaging this case is to XRP. Quibbling over fees is an absolute piss take. Just get on with it. And I think that's, the sentiment that a lot of us feel here, quibbling at this point. The lawsuit is already taking longer than it should, which begs the question, as Fred Rispoli did mention here, are there other political things at play? More and more now when we're looking at the entire picture, it does seem like there could be. Crypto Eddie also posting this. Government Blockchain Association, guys, this was back from May the 5th, so only about a week ago. Former U.S. Representative Jim Moran of 23 years, and now a senior policy advisor in D.C. with thoughts on, get this, Gary Gensler, cryptocurrency volatility, and then his last statement, a bit chilling. I'm going to play you guys this clip.
In terms of the SEC, Gary Gensler says, I've got enough legislation and regulatory authority to regulate this. He's taken about 100 actions already against crypto traders, 97 or something it comes to as of today. I suspect he's going to get more aggressive. Volatility in crypto markets is not healthy from a political standpoint. It's not healthy if you're holding a whole lot of it either. But most of the people that are holding cryptocurrency are sticking with it. They believe in it. I mean, that's fine. That adds stability to the market. When the market drops as fast as it did, invariably that draws people into a regulatory mode because people complain. Encountered some people who really think that new legislation is almost going to expunge the record for people who haven't been complying with the laws such as they are. That's not going to happen. I think there's going to be a look back. I think that people are going to be held accountable, and I think some people are going to be made an example. I don't want it to be anybody in this room.
Ho, ho, ho! I don't know who was in the room at that time, but he says people will be held accountable, people will be made examples of, And yeah, I hope it's just not anybody in this room. I would like to actually know who was at that meeting, the Blockchain Association, back on May the 5th. So the volatility is a problem. I mean, not for us. We know that's how you make money in a market, but, for the newbies complaining that they lost all their funds, maybe they were invested in Luna, and, their $16 million that they were holding on April the 5th is now worth $2.69. Of course, this is going to shake the market. There will be people who will be made examples of. So this is why, guys, make sure you do your own research and make sure you are investing in coins that are going to have longevity, that are going to have staying power, because 99% of coins will disappear, poof, in the blink of an eye. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. And guys, I'm really trying to hit 100,000 subscribers by the end of 2022. I really want to hit that target. I think it would be beneficial if I could be verified on YouTube so that we can start maybe getting rid of some of these scammers. It would also help with getting verified on Twitter. So subscribe, guys. If you're watching the videos and you like the videos, please subscribe to the channel and hit that like button. The thumbs up really does help the algorithm for the videos. I always love hearing what you have to say too, so put a comment down in the comment section, and I'll see you in the next one, guys.